Ong, and welcome to your look ahead to Tuesday, the 7th of November. First up, we're looking at Australia because we are expecting an interest rate decision from the RBA. It's expected to hike rates by 25 basis points to 4.35%. Just checking in on the chart here for you, the Aussie. This is a one-day chart, as you can see there, and the Australian dollar taking a bit of a breather, it has to be said, after a steep climb as risk sentiment improved globally and markets braced for this possible hike in interest rates. Now, resistance now lies just above the 65.20 level, with the next major target at the 200-day moving average of 66.19 or thereabouts. Both the Aussie and the Kiwi rallied after that chilly US jobs report that led markets to price in rate cuts. This is in the US by the middle of next year. Now, we've also got a lot of action out of the UK, the BRC Retail Sales Monitor, one to look out for, along with the Halifax House Price Index. Now, higher borrowing costs have hit house builders and the construction sector as well. In terms of sterling, the Bank of England has held interest rates at a 15-year high of 5.25%. Just having a look at cable here for you because cable has found strength recently, but it has still, it has to be said, been driven by the US dollar. The UK is still painting, in terms of data, a gloomy picture of the economy. The pound has been building on its recent gains against the US dollar and the euro in the run-up to Christmas. It has to be said that a stronger pound would, of course, be a good thing for the Bank of England, as it makes high inflation less painful for those earning and using the pound. And in China, we're looking out for trade balance figures. Trade surplus there expected to widen to 82 billion as imports seen falling by 4.8% more than exports. And we are also looking out for numbers out of the US, trade balance figures too, and the API crude oil inventories. Oil prices have fallen recently due to actions by Saudi Arabia and Russia as well. And in the UK, in terms of earnings, Associated British Foods is out with full-year numbers, and Persimmon out with a Q3 trading statement. Of course, the big one to look out for includes UBS out of Switzerland, Q3 earnings there. And in the US, look out for Uber out with Q3 numbers. Uber expected to publish earnings of 7 cents per share. Now, this would compare to an 18 cents loss in the same quarter last year. That's 18 cents loss. Just taking a look at the shares here for you. Uber, of course, an all-session stock on the IG platform. Revenues expected at $9.5 billion on the Q3 reading. Over the past few weeks, analysts have grown increasingly bullish on the stock, some of them upping their price target to around $60 or higher. Uber shares have posted their best weekly performance since May in the last week. And that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And Angela Barnes will be on at 7:30 on early morning call to do the same for the European market open. Follow me on Twitter at Angeline Ong. This is IGTV.